What is up, everybody? This is the Digital World Podcast. Now, we're looking here at this information, and we've ticked up since last we made a video. I believe we were in the 6.2 range for 30-year mortgages, and so um, we've definitely ticked up um, since we got that rate cut announcement on, let's see, right here around this time period. So we got it on the 17th, and we've ticked up since then. So, um, I there is anticipated that there will be another rate cut in October of 25 basis points, and so I do anticipate that this will drop more. Um, and in the short term, I think this is setting up for another wave of inflation. We've seen that the home builder the sentiment and home builder stocks have gone gone up off the lows, and so you've got to wonder where is this headed. And I was trying to find, and I'll have to find it one of these days, the chart that shows the inflationary waves of the 60s through the 80s, which was three of them. And if you overlay it with the inflation we've had in recent time, um, the pandemic inflation matches up with the second inflationary wave, right? And then there's a drop, and then there's a third inflationary wave that comes. And when that occurs, um, if it occurs, what does the markets look like as far as housing, right? And so there is a potential. Right now, it looks like there's pro cyclical monetary um, and fiscal policies that are incentivizing for the markets to melt up higher. What that does to the housing markets to be determined, right? Um, is there a world where, in the short term, you see one leg higher in housing, right? Um, as you get more data, right, you kind of assess and see where it's at. I think long term, my thoughts are, I mean, if you even look at the um, 5 year chart, right? This is what that correction looked like that we had recently in the last couple of weeks. A little blip on the radar. We've had much larger corrections, um, and all it did was just work itself back up, right? There's this range that it's held here since 2023. And so like I mentioned before, this is just a little blip on the radar. I think long term we're heading higher. Like I said, you see this compression happening here, where it's just coiling up and just getting ready to make a breakout to the upside. So this is a very slow mover. But anyways, I think that um, as of now, right, you've seen home prices declining since 2022, right? This is Lenner. Pandemic peak reached 491 on average selling price, and now it's at 383. So you're talking about 22% decline from the very top now to where it's at right now. So um, everything doesn't go down in a straight line, right? It's been a couple years of downward price action. It's gonna find a bottom at some point. I don't know, right? If this is a long term bottom, I can't say that. I'm playing it as it goes, but I do expect that these prices don't go up forever and they don't go down forever. I think we're in a transitionary period too. And so there is a possibility that you can see another leg higher potentially, right? The only problem is because you got to understand that the consumer goes off of monthly payments. Okay, if they can make the monthly payment, that's what they're going for. They're not necessarily looking at the total price. Okay, um, so if the average monthly payment becomes affordable again, let's say, like rates keep dropping, which, that's another case of like, well, how far will they drop? Will it make houses more affordable? But then if you have an influx of people trying to run in again to get a house, well, now you have demand, and that can push prices even higher than they already are. So there is a scenario in which we have a worse, even worse housing situation than we do now. But it might indeed become very short-lived. But I think a lot of people are not taking that into consideration, right? Like, we like to evaluate both sides based on information and data that we get as it comes. But I would say that you have to monitor that. There's a real scenario in which that does occur. You can make the argument that it's already expensive as is, which I would say you're right. And so a lot of people that are in their houses that they bought, let's say 2019, can no longer afford to buy their current house in today's market, right? So, and that's what you've been seeing. So I would say that you got to keep your head on the swivel. But I think long term, these rates keep going up. As of now, Fed is cutting. I think you're going to see that's going to be positive as far as equities going higher, right? The risk for inflation has been there and will currently be there. And right now, that's the risk they're going with, right? So that being said, thank you for watching. Like and subscribe to this channel. This is the Digital World Podcast, and I'll see you in the next episode.